Hello everyone. Today we are going to unlock the secret language of financial markets. If you ever looked at a trading chart and felt completely overwhelmed by all the lines, indicators and candlesticks, you are in the right place. We are going to throw out the complicated jargon and look at the market through the most powerful lens, so auction market theory and volume profile. So this isn't about guessing where the price will go. It's a visual guide to trading where capital is actually committed. So we will learn how to identify exactly where the biggest financial institutions in the world are buying and selling, so we can align our trades with theirs. By the end of the session, you won't look at a price chart the same way again. Let's get started. So think of financial market like a massive global real estate auction. Instead of trying to guess what a house is worth based on how fast people are walking through the open house, we wanted to look at the actual bids and sales. We want to find the exact prices where buyers and sellers are agreeing to do a business and where they are walking away. So let me just draw an illustration here which we just discussed so that you will understand. So let's assume here is a house and this house is for a sale. This house is for a sale. So you are not going to just buy house whatever rates is buyer is going to say, right? Whatever rate seller is going to say. What you are going to do, you are going to inquire in this area. Let's assume this is a road. So in this there are multiple houses here. There are multiple houses, multiple properties in this area. So what you are going to do, you are going to inquire in this area. You are going to see that supply and demand here in this area, how sellers are selling their houses, how buyers are buying their houses, at what cost, at what price. So you are going to check that first. When you know this volume, that buyers are sellers agreeing to so and so price. Let's assume here seller have said 3 million for this house. But when you inquired in the market, when you have seen that buyers and sellers are agreeing for 2.5 million in this area, will you go and buy for 3 million, or will you negotiate with the sellers, or else till the seller comes down for your price, which is 2.5 million, which is the original price in this area? Are you going to buy at this 2.5 million, or will you invest and buy 3 million knowing that 2.5 million is the best fair value price in this area? So definitely you are going to negotiate with the sellers, and whether if the seller comes to this fair value price of 2.5 million, you are going to buy. Else you are going to look for another property, or else you are going to wait for the price to come to the fair value price, then you are going to buy this house. In the similar way, so when there is a stock, let's assume this is a chart and price is going from here. Now price is at 3000. Okay, so now sellers are selling at 3000. Okay, but is there a possibility for the price to go from 3000 to up? Is there a possibility for price to come from 3000 to down? So if you have to know that, so you should know where actually buyers and sellers are sitting. What is the fair value price of this stock? Whether the fair value price of this stock is 2500, or whether the fair value price of the stock is 2000 rupees. If you know this, you will wait for the price to come to the fair value zone, then you are going to enter into the stock. So you are walking along with the food players of buyers and sellers. So when you say fair value price here. So when price comes here, if price is going to jump from here, it means that there is a big institutional player is sitting here who can move the price of any asset. It can be a stock, it can be a crypto, it can be a currency, it can be any index in the world. So the concepts work same. So you will be waiting for the fair value price. If you know how to identify the fair value price, you will wait for that, and accordingly you are going to jump in, and accordingly you are going to enter into the stock when price reaches the fair value price. So if you are not aware of this fair value price, what will happen? You are going to buy a 3 million here house. Similarly, you are going to buy a 3000 rupees this stock. So in future, you might see from 3 million this house might go to 3.2 million, and later it will come and settle at 2.5 million or 2.6 million. So here this is a fair value price in this area. So obviously for a moment you might see price is there at 3.2 million, but later it will come back to its original fair value price 2.5 to 2.6 million. In the same way, stock, when you enter at 3000 rupees, you see that your stock is turning into green, your portfolio is turning into green for a couple of days, and immediately price will return and it will trigger your stop loss and it will come to the fair value price. So the real world example, if I have to give to this, when you buy a used car, you don't look at how long the car has been sitting on the lot, right? So suppose there is a resale company here. So we have a resale company here, and you wanted to buy a car. Let's assume you wanted to buy a BMW, which is 2025 model. You wanted to buy a BMW from a resale company. So you are going to see how long this car is sitting in a garage in this resale company. Let's assume this car is sitting there for 3 months. What is this 3 months indicates? Time. The car is sitting in the garage for 3 months indicates time. By seeing this, will you go and buy the car, or else do you wanted to inquire in the market how many sales happened in the past for the same BMW 2025 model car? Okay, how many sellers have sold same model car, and how many buyers have bought the same model car, and at what price? So do you inquire this? If you know this information, what will happen? You will be able to negotiate with the reselling company, and accordingly you can buy at that fair value price. Suppose the reseller company is selling this car at 5 million, but the fair value price in the market recently, what buys and sells happened of this BMW car of 2025 model, it's around 4 million. So if you go and buy at 5 million, which reseller company is selling, are you buying at an expensive price, or else are you buying at a fair value price or cheap price? So obviously you are buying at an expensive price. When you buy at an expensive price, will you get further appreciation on this or further depreciation on this? So when you buy at an expensive price, definitely you are not going to get an appreciation. Definitely the car will be depreciated as the time pass away, and your price will come down and you will face the depreciation effect. So in the same way, in the market also, when you are buying any stock, okay, we are not going to buy at the high prices. You are going to wait for a price to come down to the fair value price. Then only you are going to buy that assets, so that you will be able to make some profit. So this is exactly what volume profile is going to do. By using this volume profile, you can analyze where is the fair value price, where is the big players, institutional players are sitting, and accordingly you can walk on their footprints. So you can apply this volume profile on any stock, any index, crypto, forex, it works the same way. So if you are liking this video, you can just give a thumbs up, or you can just like this video, and you can subscribe to this channel. So you might have seen, you might have faced similar kind of situation, like you have bought a stock, so the stock was rallying up, 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 and it was consolidating here. Okay, it was consolidating here, and you marked this as a resistance, and you got a breakout. So how many of you bought a stock on the breakout? After you buying the stock on the breakout, and you kept a stop loss somewhere here, and the stock have turned back and triggered your stop loss. How many of you have faced this situation? Don't worry, we have all been there. Even myself have been there in this situation. Today you will learn exactly why that happens, and how to avoid this, and why the traditional way most retail traders look at the charts is actually keeping them in the dark. So let's look at the old way versus the new way. So what is the old way of trading here? Let's look at on the left hand side here. Just look at on the left hand side here. So this is the old way of traditional candlestick charts. For decades, retail traders have been obsessed with the time. For decades, retail traders are obsessed with the time. So they think that if a price is there in a zone, let's assume, based on which time frame you are trading. Suppose if a price there in this zone for 5 weeks or 8 weeks, people think that this is an accumulation, and when breakout happens, they enter in the breakout trade, and when breakdown happens, they enter in the breakdown trade, and eventually price will come back and trigger your stop losses. So this is how general retail traders were doing from so long, with the help of this time. So now we are obsessed with this time. So these charts are chronocentric because their x-axis is a linear time. Every candle represents 5 minutes, 1 hour, 1 day, but here is the flaw. Based on whichever time frame you see, so it is going to represent in that time frame. But here is the flaw. Traditional charts focus on when price moves, which completely obscures true liquidity. So based on the time, your charts will be moving, but you will not be aware of the true liquidity where actually buying and selling is happening. They don't tell us if 10 shares or 10 million shares traded at a particular price. Will this candle tell you how many shares traded here? Will this candle tell you how many shares traded here at this level, at this level, at this level, at this level? This candle is not going to represent that. So if you apply a volume indicator here, this volume will tell you how much quantity is traded in this candle. But how much volume is traded, how many shares are traded at particular price level, so even your volume indicator will not help you. Even the candlesticks whichever you see is not going to tell you that how many shares are traded within this candle at that particular price, at a particular price. Now look at the right side. So now look at this right side. This is the new way profile trading, where are turning our focus 90 degrees. So instead of tracking price against the time, so here what we are going to do, so this measures transaction density. At 100 rupees, how many shares have been bought? At 99 rupees, how many shares people have bought? At 80 rupees, how many shares people have bought? How much volume is traded and what is that volume density. This is going to tell you. It reveals exactly where capital is committed. So when you know where capital high amount of shares got traded, it means that there is high amount of trading happened, number of shares purchased here compared to this, compared to this, compared to this, compared to this is more here. The number of shares purchased at this price is more than the number of shares purchased at the top or the number of shares purchased at the bottom. With this representation, you know where exactly big players have entered and they have committed their capital. So this uncovers those liquidity pockets. These horizontal bars sticking out represents prices where massive blocks of shares or contracts change hands. This reveals the hidden structural support and resistance that time-based charts simply cannot see. This time-based charts, with this you cannot see where, at which price, how much volume is traded, how many shares are being bought or sold. Whereas this profile trading, the new way of profile trading, will help you at which price, how many shares people have bought or sold. In other terms, how many contracts are exchanged between buyers and sellers. That way you know where exactly huge capital is committed. So let me give an example. Imagine you buy, okay, so imagine you are on a busy retail clothing store. So here let's assume this is a busy retail clothing store. So this is one open, this is one open. So here you have staircase to up. This is first floor and this is ground floor. Let's assume this is a mall where it is a retail clothing store. So a traditional chart is like a security camera. So that takes a snapshot of the front door every 10 minutes. And let's assume here is a camera at the front door. Here is a camera at the front door. Every 10 minutes, this security camera takes a snapshot of this front door and it will tell you when people walked in but nothing else. So this camera will tell you, suppose one person have walked in here. So this will tell you this person have walked in at 10 a.m. Okay, and again another person will walk in and again security camera will capture this person also, and by that you will know when this person have entered. Let's assume this person have entered 10:30, 10:30 a.m. So you will know with this camera when each person have walked into this clothing store at what time. Apart from this, this is not going to tell you anything, nothing else. A volume profile is like a thermal heat map on the floor. Okay, let's assume this is a retail store and here we have a thermal heat map. Like you will see the scans in the airport, right? So when you put a bag into that moving what you say, that moving security luggage thing, scanning thing, so it is going to scan your bag and you, in the monitor, the security will get a thermal representation of what all items are there in your bag. So it is going to scan everything and it will show in the monitor that what all items are there in the bag. In the similar way, profile trading is nothing but like it's a thermal heat map on the floor, on the store floor. It shows exactly which clothing rack. Suppose here we have rack 1, okay, which is of t-shirts, and here we have rack 2, which is of hoodies. So here we have 2 racks in this clothing store. One is t-shirt and one is hoodies. You have a thermal heat map on the floor. What it does, it shows you exactly which clothing racks customers should in front of which of these clothing racks for how much time, how many hours, how much time they have spent their money. Okay, suppose person walked in, A person walked in into this clothing store, B person walked in into the clothing store, C person have walked in into the clothing stores. A and B spent most of their time in front of R1 rack, and C have spent in front of R2 rack. So when you know this data, in front of which rack how many people are standing and how many people are spending time in front of which rack, so that your sales are happening. When you know this data, you know 90% that money is going here into this rack, R1 rack. When more customers are coming and standing only in front of R1 rack instead of R2 rack, by which you know that most of the customers are interested in t-shirts and 90% of your sales are happening for the t-shirts. So which is of these two tools would you use to decide what inventory to stock? Obviously the heat map. So by using these tools, which of these two tools you use? Either security camera or heat map. With security camera you will just know which person is coming into the store at what time, nothing else. And when you have a heat map on the floor, you know which person is standing in front of which rack, so that by that you can guess how much sales are happening for what kind of product in your clothing store. So when you know that data, which of these you trust more and use more? Either security camera or the heat map to increase your sales, and accordingly you buy more stock for t-shirts based on this heat map. So this is going to help you to stock more inventory for t-shirts. This security camera is not going to help you that. So same way, during a market panic, a stock might plunge from 100 rupees to 90 rupees. So suppose here it is 100 rupees. So there is some panic. So it might plunge from 100 rupees to 90 rupees. It might come down from 100 rupees to 90 rupees in 2 minutes with very thin volume. Because of some sudden piece of news or something has happened, the price comes here, and then spend 6 hours trading heavily, at 92. A traditional chart makes the move down to 90 looks massive and terrifying. So when you see this chart, when you see this is a red candle, this is a red candle, this is a red candle, now price is here. Okay, price is consolidating here at 92. Do you think price will reverse from here, or do you identify somewhere resistance here and think price is going to come down? Definitely by seeing this chart we will identify somewhere resistance here. This is a breakdown zone. So now when price reverses here, we will sell and price will further fall more. Okay, this is what our mindset will be. When we look at the traditional chart, it looks massive selling and we will be afraid, or we will have that fear in us, so that we might not enter this stock. Okay, or else if we enter also, we will enter for the stock to capture the movement for the downside, not for the upside. But when you come to this volume profile, so let's assume, so here is the 100, price is 100, and here is 90. So price suddenly came from 100 to 90 by some news, and here you are seeing slow volume. Okay, very little volume. Okay, and here is the price 92. Now price is consolidating here for 4 to 5 hours, and you see the volume buildup is happening, and you see this volume bar. Okay, here is increasing and it has extended towards right here. It means that what is happening here, the more buying is happening at this place, big players think that this is a fair value price and they have to enter here, so that the stock is going to rise up and they can capture that movement. When you know this, by seeing this volume profile, this will instantly show you the true picture of why price have fallen and where the price is taking support. Where millions of dollars actually changed their hands was at 92 price. Was at 92 price. So while 90 was just a temporary liquidity dip here, but big players know that 92 is a fair value price. That is why the volume was building up here, and the millions of dollars or millions of rupees are exchanging hands here at 92 fair value price. With this volume profile, you will be able to identify where actually big players are entering into the market, where they think that this is a fair value price and we have to enter. Ask yourself this: does a price level on chart matter more because the clock struck for 1 hour, 2 hours, or because hundreds of rupees or hundreds of crores, hundreds of millions of institutional capital was traded there? So which one is better? So now that we see why focusing on capital commitment is so much powerful than focusing on time. So instead of focusing on time, focus on where actually capital is committed. So let's look at the underlying theory that explains why market behaves this way in our next video. So I am going to upload a series of videos of this fixed range volume profile trading. So this is the first video that is going to be there, and following to this you are going to get n number of videos on each and every topic related to this volume profile trading. So let's meet in the next video. Thank you.